Overseas stocks rise as the ECB prepares to provide a second round of unlimited funds. Italian bond yields fall. Warren Buffett likes the banks. S&Ps are set to open above the key 1370 level. Can they hold? I'm Brittany Umar, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with TheStreet, and together we bring you Morning Call. So, Scott, the news of the day pretty much is the Dow opening above 13,000, S&P above 1370, which is even above 2011 highs. So, based off of what happened yesterday, what's your game plan for today?
I think I want to see us hold above those levels and extend. Yesterday, we all had the chance to buy the dip that nobody wanted to buy. We were in here yesterday talking about the 10-day moving average, how important it has been since the start of this rally. The NASDAQ right now is now over that 10-day moving average for 45 sessions, not giving anyone reason to really worry. And if you look here of the spiders, we went over this yesterday. Look at the chart here. You know, I'm not even going to get into the gradual uptrend. I'm going to talk about this accelerated uptrend that we've been riding ever since December 20th. If you look within here, a lot closer, you see this little line here? This is the 10-day moving average that we have not breached. Here we touched it. Here for 2 days, we kind of held below it, but held the trend line, and we've been riding it ever since. And yesterday, traders that bought the 10-day moving average yesterday on the dip, they're now getting rewarded as we open higher. Now the question here, if you go to the weekly chart, you will see we are now getting close to this or opening above this 1370, which is last year's high. So if we could hold above it, I do think we might hit 1400 a little sooner than I would have thought this year.
Now, while the market signaled risk on yesterday, oil, of course, did signal risk off. So what do you make of sort of the mixed signals? Or do they not have to correlate necessarily?
Well, since the 2008 lows, oil and the S&Ps have correlated. You've seen oil up, market up. I know lately everyone's worried about oil, and rightly so. You should have it on the back burner. But we talked last week about how oil probably won't be a problem until it gets above 110, even 115. And right now what you want to do is when you see the relationship change, you change with it. So if you see oil up a few dollars and the S&P down, or the S&P futures down, then finally it seems like oil matters to the market. But right now they're pretty much trading together, so just think about it. Don't let it just dictate your trading.
Now, we talked about this a little bit in Morning Call Express, but there were a couple key places where we saw some positivity yesterday. What exactly led us out?
Okay, well, yesterday you saw Apple down. Apple's been a very big psychological factor of the market. It's been the strongest tech stock. It went from down $4 to positive to taking out the highs of the year. That helped the tech sector with the semis. If you look at the chart of Apple, you will see the stock has done very, very well, and it actually engulfed what was a big time outside day. That was that outside reversal going into option expiration, held the 10-day. Oh, what a quinky dink, another situation holding the 10-day. And then yesterday, it went positive, it went above the previous high, and it brought up a lot of other tech with it. And you also had some strength in the banks.
Speaking of the banks, I mean, that was another hugely exciting thing with Warren Buffett and his comments about JP Morgan, Wells Fargo. Let's start with JP because you've been long JP. So how exciting was that, and where are you going from here?
Well, I went back along JP Morgan on the dip, I think Thursday, Friday. I've been trying to ride that. So when I heard Warren talking, I don't know, Mr. Buffett, you got to give your respect due because he's an unbelievable investor, started talking about almost like a hedge fund manager. He's like, I have JP Morgan in my PA. Meanwhile, that helped the stock. If you look here at the chart of JP Morgan, it's been, having a nice, slow, methodical move. I've talked about it so many times on Morning Call. This is when it broke this downtrend. Okay, and since then it's been going sideways, consolidating a big move from the lows. So yesterday it finally got a little juice, closed above this 38.35, around 39. I do think we could see at least 40 to 42 on JP Morgan, and it helped fuel some of the other banks.
Exactly, and as Mr. Buffett also said, Wells Fargo, if he had to choose one bank to buy, if he could choose only one, it would be Wells Fargo, so he obviously thinks that it's fundamentally strong. Looking at the technicals, do you agree?
Yeah, but Wells Fargo did not take out that recent high. So let's see if it could do it today. If you look at the chart of Wells Fargo, it's been very strong, leading the market. I haven't really been in Wells Fargo just because you can't be in them all. This is when Wells Fargo broke its downtrend and it cleared this resistance, and now it's been going sideways up here. Yesterday, it did have a very big engulfing bar also, nice and powerful right there. You could see it. So if it can get above this high here, let me get my little trusty Quotron there. If it can get above the high of 31.47, I think this continues too. You don't have to be in them all. I would say pick 2 or 3. Either choose like a JP Morgan or a Wells Fargo, and then if you want to choose one of the investment banks, I would go with maybe a Goldman Sachs that has a nice setup.
Okay, you said Goldman then has a nice setup. One of the interesting things I think is that Goldman has been one of the laggards of the group. So I was actually going to ask you, would you ever consider a long short play within the financials as Goldman being your short?
Oh, a little hedged approach. I typically don't hedge within the same group because I like to be somewhat directional. Like if I'm long a lot of, like right now I'm long just say 9 to 10 multiple positions, I'll short maybe some of the indices against it. But there are guys that will like be long JP Morgan, short Goldman, and do situations like that. I typically don't do that. That's not my strategy. But if you do see my strategies, I play breakouts. And even though Goldman is a laggard, I do think at some point this Goldman will break above this area. So if you look here at this big resistance going across in Goldman Sachs, you will see that this 118 area is very big. So yesterday I saw this strength in the other financials, so I bought a little Goldman, not a lot as a laggard. I'm going to wait to see if it can start breaking above 118. I will add for cash flow, and then I do think we can get a move to 123 to 125. So Goldman as a cash flow trade, I think could be on your radar either today or tomorrow.
Now what about MasterCard? Because MasterCard just continues to impress.
MasterCard and Visa, we've talked about over the past 2 years, always showing relative strength, most of the time above the moving averages. So if you recognize the technicals, they pay off because this stock is at new highs, giving investors, in the beginning of the year it was a little shaky, but they just shook the tree and then it regrouped. And look at the chart here. There's not much bad you could say about MasterCard, especially as it's now at new highs in the year. You saw some of the other banks, they were just trying to get through resistance. MasterCard is just, been on its way. I think you take profits along the way. If you're a macro investor, it's giving you actually no signs that it's slowing down yet.
All right, well, up next, we're going to dive into commodities. They rested yesterday. Will that continue today? Stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, and we're back talking about commodities. We did see them rest yesterday, Scott. Let's talk GLD first. Gold, we did have it have a strong behavior since Fed Day, but we've seen it rest yesterday. Will we continue to see a pullback?
Well, sometimes consolidation is good, and ever since that Fed Day when they basically said we're just going to print money and we're going to keep that stance, you broke that downtrend. And the reason why I always focus on downtrends is because it's an exciting action area. That's when a trend changes. And if you look at the chart of GLD, it's been acting perfectly technically since that change. So go to the chart, you will see. If you remember last year, put its high in, way back when during that summer, put a lower high, another lower high, and it was under pressure. I think I was on Street Signs this day where I said, you know what, we have a bit of an outside day. If you've been short during this entire time, cover your shorts. And I wasn't sold on buying it, but at least, if you weren't a pig, you made your money and you covered. So where the trend actually changed this year is when it broke this downtrend right here on that Fed Day. You had a nice move up. So from where we came from to go sideways in a descending channel is normal. It consolidated. That's actually like a bull flag where here's the pole, here's the flag, then we continued. And now we're doing it again. So today, GLDs are opening up. If it can get above this little high area and hold above it of 173.77, you're going to see 175 to 180 pretty quick. If it opens above it and closes below it, look at that as a small sell signal. But as of right now, this new trend is to the upside, and it's been riding the 10-day also. So make sure you stay with it and don't fight it.
Now, we actually saw more resilience yesterday out of silver than we did out of gold. So if you had to pick one to get behind, what would it be?
At this point, people could choose both, but you don't have to if you have limited funds. I think whichever one you're more comfortable with. If you look at the chart of silver, this time it's not really the tail of the dog wagging like it was in the previous years. It's actually moving with it and sometimes outperforming based on percentages. So if you look here at the chart, you will see it also broke its downtrend, okay, which is a reason why I always point it out, because when you break your downtrend, you create a new trend. And this is where it had an outside day when it broke below this previous level, closed above it. So that was your, change gears, look for a complexion change, and here you go. So from this 30 area, you had a nice quick move up to about 32. It also went sideways, consolidated, descending trend line, then broke above 2 small inside days that it's trying to clear. Next big resistance, if you look here, is going to be probably where this gap is, coming in right around 36, or around 36 in the SLV. That's where you should take a hard look and see whether or not you want to take some profits.
And what about the miners, GDX?
The miners, when Alice was here, she would always talk about the fundamentals, and she loved them, and technically they're always hard to deal with, and they typically lag. There is a small setup here to watch. If you look at the GDX, which I don't really trade the miners because they always have secondaries, you have mines explode. The market's hard enough to then pick a miner that you want to do. So if you want to trade them, perhaps use the indice or the ETF. So here you have the GDX. You will see, yesterday it held in there. It also had a decent move. Some guys were talking about it, buying it into this moving average. Really, I would think it's got to take out this double top of 58 in the GDX for some momentum to come in, for then a move to what could be, I would say, the 62 area. We'll go over some mining stocks maybe on the radio later, but right now it's acting better. You have a series of higher lows, right? Here's a low, a higher low, another higher low. This could be another higher low. So if it takes out 58, perhaps the miners could look better. Until then, I would just stay small there.
And we did see oil take a rest yesterday as well. Are you expecting that to continue, or is there more upside in store?
I do think there's more upside. If you take a quick look at the USO, which doesn't correlate perfectly, but you could see the size of the move that oil had. So no big deal. Look at this channel going sideways with oil, and finally it broke above 40. You had a nice move to 42. Yesterday was a down day. Maybe we go sideways. And I think for the overall market, if oil starts to get back above 109, these USOs will clear this 42. And perhaps if you're looking for another trade, that's when you get back into the USOs to the upside. And if that's the case, then you have to make sure and see how the market responds to higher highs in oil. So let's hope that doesn't happen too quickly.
All right, now real quickly, I know we touched on Apple a little bit before. The stock did make new highs yesterday. This is a strong stock, Scott. So what level again are you watching it at?
I'd say right now, technical traders or short-term momentum traders would like to see it hold above 526. If it holds above 526, it could see north of 530 in the next session or so, maybe today.
And IBM, will it hold above 195?
I like IBM. We played it for the breakout last week. You could have bought above 195, sold it above 198, and stayed the course. If you look real quickly at the chart pattern here, it's holding the breakout level really well. So for me, if it could start getting above 199 and shows relative strength, I might add a trading lot for a move above 200. I would stay with IBM.
Okay, and your game plan with 3M?
3M, I've been holding it for a week. It's not a stock that I usually hold or stay with, but it has a nice, tight consolidation. I'm in about tier 1.5 now. If you look at the chart here, you will see why. Really tight channel after a decent move. So if this could finally get above 88.50, I do think we could see at least 90 pretty quick. So I would keep this on the radar, especially if the Dow stays strong. You could see 90 or even higher. So watch that one for a breakout.
All right, and CF, leader in the ag sector, is it poised for a breakout?
It looks good. Yesterday, Mark Sperling was talking about it on the radio on the VTF, and he was like, this is helping to lead the ags. He was taking some long. You look here at CF, you will see, it looks like it's ready to take out those highs. It's above these moving averages. This level right here is, what was yesterday's high? Yesterday's high was about 190. So if it could start clearing this area of 192, you're going to see fresh highs on CF, and that'll help the rest of the ags as well.
All right, and First Solar earnings are out tomorrow. It's near 52-week lows, so should we be picking some up here?
I don't typically trade stocks ahead of earnings. What I'll do is I'll take some options, so I know the premium paid is your risk. I would just watch it. With oil high, sometimes the solars get some attention. Wait to see what the results are, and then make sure you have 4 or 5 other solars on your list with certain buy prices, and we'll go over that later on the recap.
All right, so finally, Scott, what is your game plan for trading today?
I'm holding right now, I think 8, 9 longs, and I have like 2 or 3 hedges, and I'm going to see if we could hold above 1370. If we could hold above 1370, and I start to see some of the stocks we went over start to break out, whether it's Goldman Sachs, whether it's Triple M or IBM, I'll add to them, and hopefully we get some momentum, and then I'll sell some for cash flow, but then I'm going to stay with my existing longs and try and keep it moving. I've been long these OAHs since like the end of December. It's been a nice hold, nice and methodical. So holding these positions as they ride their 10-day moving average has made you money, and then adding at specific setups has made you extra cash flow. I'll try a little bit of both today.
All right, sounds like a good plan. Thanks, Scott. Happy trading, everyone. Have a great day.